Good evening, everyone. I know it's late. Let's try it again. Good evening. There we go. I heard the resounding applause for the award winner, so I know you guys have it in you. Let's first, if we can, give another hand to Sonia and her presentation. I thought she was fantastic. It takes a lot of courage to talk about race and gender equality. And I'm proud of what you have done and what you've encouraged this group to do. I also want to thank George, Steve, Jan, and the whole team here. This is my first SRI conference, and so I'm excited to be here. You guys do a tremendous job. Let's give them a round of applause. So I know you're thinking, we're going to talk about public sector investing from a municipal treasurer who's an elected official at the end of the night before an ice cream social. Great. So I thought I would take a different approach here and tell a story. And this story is about Chicago, and it's about Chicago discovering its power. And like any great story, you have to have a protagonist. And you have to have, in this parable, some figure that you point to that the audience can relate to. And when folks talk about discovering their power, you could look at biblical figures like Moses or David. We can look at historic figures like Lincoln or Churchill. I decided, since it's the SRA conference and it's the end of the evening, I would talk about a personal hero of mine as our protagonist. And since I was a kid who grew up in the 80s, my personal hero was He-Man, the cartoon character. Raise your hand if you know who that is, right? Those of you who don't are about to get educated. So the story of He-Man starts with this fellow. His name's Prince Adam. Now, Prince Adam was next in line to the throne, and what he wanted to do was defend his country and earn the respect and admiration of his father, the king. And he always doubted himself and his ability to do so. Till one day, Prince Adam took the asset that he had with him all the time, the thing that he would use to try and help his dad, his sword. And he realized this sword was special, and this sword had power that he didn't know that it had. And one day he pulls out his sword and says the words, after discovering that it has power, "I have the power," in this asset, in this sword that he carried with him all the time. And that's how he became He-Man, which was, like I said, my favorite character on Saturday mornings growing up. And the story of He-Man was, this is the defender of the universe, the greatest provider of good in the universe, the protector of the universe. And as a kid growing up on the south side of Chicago, it was sort of like a fantasy escape for me to be able to have that kind of power to change my condition and the condition of my neighborhood and the people around me. And so I idolized He-Man, and I thought, who better to think about the lens of what Chicago has gone through in the last several years with a great team of people in discovering its own power and the power of its assets. First, in this story, let me just tell you why you should care about the investment strategies of Chicago's treasurer or any municipal treasurer for that matter. Well, the first is, as Matthew said, municipal treasurers are some of the largest asset owners and managers in the world. Many of you may not know this, but state and local treasurers manage $3.1 trillion of treasury assets. This doesn't include pension and retirement plans. Oftentimes we focus on pension plans and what are pension plans doing. There's $3.1 trillion that are sitting dormant in portfolios managed by state, county, and city and town treasurers around the country. Just as important, and what's fascinating about this capital, most of this is sleepy capital that folks don't think about. It's bond proceeds, it's operating cash, it's some reserves, and it's primarily invested in short-term and fixed income assets. Well, what some in this room, but many don't know, is that those fixed income assets and issuances are 11 times the volume of the equities market. So if you add up all of the IPOs, common offerings, secondary offerings, private and preferred offerings, and you compare those against the fixed income market is 11 times the size of the equities market. And what's more, the vast majority of those assets are invested in investments that are less than 5 years, meaning this $3.1 trillion that's invested largely in fixed income, largely in shorter duration assets, is the most sought after source of capital by any company around the world. Folks go to markets for fixed income, for debt, for leverage, far more than they go to the equities markets, far more than the size of private equity investments, venture capital investments, hedge fund investments in a given year. This speaks to the latent power that sits in these municipal treasuries around the country. And what we've also discovered, and this is why you should care, is that municipal treasurers can be great innovators and collaborators. Now, that's not the case always, but naturally, there are two things that line up that are consistent with the goals of the folks that are in this room. One, we have an aligned mission, that we're there for the public good and for public interest. The second, we're not in competition with private markets. We don't have to worry about someone stealing our trade secrets and sort of retrading us or getting out in front of us in our trading strategy. In fact, we're forced to be a transparent and open book in the way in which we invest capital. So you have a petri dish, a platform that is open for collaboration, is transparent, and is designed for the public good. So let me take you back a few years in Chicago. I was elected almost 4 years ago, and I came in and I discovered that we had an asset, we had our sword, and that sword was rusty, and it needed to be sharpened, and it needed to be polished, but it was an asset. In the city of Chicago, we manage almost $8 billion of treasury assets as the third largest city in the country. But in order to get the power out of that sword, in order to get the power out of that portfolio, we had to make some significant changes. The first was we had to change and modernize our technology. So at the time, I was 35 years old, and we were using a treasury investment system that was 37 years old. Not really the platform you want to use in this age of high-frequency trading and a dynamic market, and the new treasurer coming in and discovering that the IT platform is older than he is, probably not a good sign. So we had to upgrade and invest in our technology. We also had to change our investment policy, which hadn't been updated since the global financial crisis and didn't account for new measures of risk and opportunity. We had to change and innovate in our investment strategies. And folks in this room may not consider it innovative, but for a municipal treasurer to say, we need to look at more diversification, we need to look at better risk management, we need to change the way we invest along the curve and look at spreads differently, was novel, and unfortunately across the country still is novel. And then most importantly, we had to improve our human capital. And I'm happy to say that we were able to attract some of the most talented people in the world in this office, and we have an incredibly diverse team, to Sonia's point. Our makeup is about 50-50 male and female. It's about a third Latinx, a third African American, a third white. And we hired the first ever, thank you, yeah, that's a good thing. We hired the first ever Latina chief investment officer, the first ever woman chief investment officer of the city of Chicago, which I thought was shocking, appalling, and I was proud to hire her 3 years ago. And we also invested in great young talent, and we have this talent, up and down sort of our leadership structure. We invested in them getting their CFAs, we invested in their training, and now I think we have just such a great model. Our team is training other treasurers around the country on how to do what we do. So this was us discovering our sword, polishing it, sharpening it, and realizing that if we did this hard work, we could maybe see some results and maybe generate power from this asset. So I probably wouldn't be here talking to you about it if it didn't generate great results. So here's a quick snapshot of what they are. The right side really just talks about how we vastly sort of diversified the portfolio and changed the mix of securities. The left side speaks to almost like a holy grail of outcomes that we had. We were able to decrease duration. So, the fixed income investors in here may geek out a little bit, so just, bear with them. But we were able to decrease duration, increase yield, increase earnings by almost 2.5 times, and lower mark-to-market losses that were on the books from the portfolio that we inherited. It's virtually impossible to do this. If you go to Graham and Dodd security analysis or some old textbook, it tells you it's not possible to decrease duration, increase yield, increase earnings, decrease existing losses from longer duration securities. But we were able to do it because we worked really hard over a long period of time and we had great talent. We expanded the group of broker-dealers that we worked with. We put a best ideas practice in place. And it's not public yet, so I can't give public numbers, but I can tell you that in 2018, we are on track to have our best year yet, and what will likely be close to 3x the earnings that we had when I came in office. Almost $100 million more in the portfolio annually for the city of Chicago, for the people of Chicago, which is fantastic. But here's, I'm not here for the pat on the back. I'm here to tell you what that actually enabled us to do and why that's relevant for this room. That was us taking responsibility. That was us sharpening our sword and taking ownership and realizing the value of the asset. And then we said, now what can we do to put this asset to work in a comprehensive way and invest for impact? Now that we've shown that we can kick butt and that we know what we're doing and we're sophisticated, and we've built the credibility internally and the support externally, what can we do with that? And we put together a comprehensive approach to investing for impact, which really had 2 platforms. The first was to deliver results locally, invest in Chicago's future, and the second was to drive the conversation globally and figure out where we can use this massive pool of assets, this powerful sword, to help drive the conversation globally. I'll start with what we did in Chicago. We took a little over 0.5% of the portfolio and said we want to take this out of our traditional investment strategies and invest locally. And we launched the first ever municipal local investment fund to invest in neighborhoods outside of the Loop, outside of downtown Chicago. There are 77 neighborhoods in Chicago. The vast majority of the capital in our $700 billion regional economy is centralized in the Loop, in the Central Business District. We changed that. The second thing I'll point to that's personal to me is we made a $20 million deposit in the last black-owned bank in the city of Chicago, last black-owned bank in the state of Illinois, which is home to, look, the applause is sort of really for what happens next. Now, Illinois is home to more bank charters than any other state in the union by a factor of 2x. And we had one remaining black-owned bank, and it happened to be 4 blocks away from where I grew up in the neighborhood of Bronzeville in Chicago. And this bank was struggling, and this bank had been taken over by new ownership, and was sort of on the verge of going under, and we worked with them over the course of the year to prepare them for this infusion of capital. And I'm happy to say that now, a little over a year later, this bank, as a result of our investment, has had its first profitable year in the last decade. It has staved off its dissolution, and its prospects are incredibly bright, and that $20 million has been invested effectively 1.5 times in the community that I grew up in Chicago, and it's something that we're quite proud of. Thank you. The last sort of pillar there, in the last 2 months, we've been even more focused with the traditional investment strategies in our portfolio and invested in local baskets of agency securities that support affordable housing, infrastructure, transportation, senior housing in our city. And we were able to work with the agency issuers to get a specific basket. And the reality was, we sort of looked at our investment policies for our treasury, and for our pension assets, and we had a mandate to invest everywhere in the world, in South America, in East Asia, and Western Europe, everywhere but the third largest market in the largest economy in the world, which happened to be our backyard. 0% invested locally. And we said, wait a second. We are a strong, thriving, growing, diverse economy. We're missing out on opportunity here. And if we're going to buy securities that support housing or transportation or infrastructure in the U.S., why not look at a portion of that being here locally? And that's begun to have a tremendous impact. Now, as part of this conversation and what we viewed the power of our ability to invest for impact and how it can change the conversation globally. This year, we announced that we'd be the first city treasury to become a signatory to the UNPRI. We are the largest city in the world to be a signatory to the UNPRI. And we also made an announcement that we'd be the first city in the world to commit to having a carbon neutral portfolio by 2020. And I'm excited to tell you that number is probably closer to $50 million now in green or renewable sourced securities. We will reach that goal of carbon neutrality by the middle of next year, well ahead of schedule. Finally, we did something that I think is really hard for municipal treasurers to do, and in part this is where you come in and where folks like me around the country need your help. We committed to having a minimum ESG portfolio rating for our portfolio in the same way we have a minimum credit score of AA or better for the portfolio, in the same way that we have limitations on duration and other forms of risk. We committed to having an ESG rating for the portfolio, and we did. In doing so, we said, well, how do we want to represent that? And we looked at every data provider that's out there, some of whom I'm sure are in this room, and they do great work. MSCI, Sustainalytics, Robico, SASB, you name it. And we said yes to all of them. Yes, we want all of your data, but we want to create a bespoke platform for this office. We want to score and rate and have our own algorithm for our portfolio that's consistent with what we believe the real risks are with securities and consistent with our values. That meant starting with the world of over 2,000 variables that exist that can be evaluated when you look at securities in respect to ESG. We got to 800 that we thought were statistically significant and 200 that were unique to us, that were consistent with our values, that we thought would have an impact on our portfolio, that would reward good actors and not continue to reward bad behavior and bad actors. As a result, We've now integrated 100% of our portfolio with ESG scoring. Our entire investable universe has to go through the ESG scoring process, and every security that we invest in has to be evaluated alongside credit, yield, duration, price, the ESG impact, and score. This is relatively novel, and often what happens is institutional investors, especially large public investors or public institutions, talk about a sliver of their investments that are going to go toward impact investing or to ESG or to SRI or green bonds. Or it's not about that 5% that's going to go there or that 10% that's going to go there. It's also not about the 5% that you're going to divest in fossil fuel companies or private prisons or whatever the issue is. It's about 100% of your portfolio. What do you stand for? What do you believe matters? What do you believe represents a real risk? And it's whether you're talking about climate change or data security or workers' rights or diversity of the C-suite or boards, all of those things, if you believe that they matter in a part of your portfolio, if you believe they represent risks or opportunities for your investment, then they should and they do for the rest of your portfolio. And that's really the step that we've taken here. Now, I want to tell you just a quick sub-story, I guess, in this story of He-Man in Chicago. I was at CII last week, Council of Institutional Investors. And those of you who don't know, CII is largest institutional investors in the world, sovereign wealth funds, public plans, state plans, you name it. A lot of folks who believe themselves to be very sophisticated investors, and most of them are right. And I was on a panel, someone got that. I was on a panel with a woman, and we were talking with a set of people, but there was one woman who, her story and her courage really struck me, and I want to share it with you. Her name's Tasha. She's a Teamster based in Memphis, and she and 3 other courageous women came out about a month ago and blew the whistle on their company for sexual harassment, for gender discrimination, for workplace violations and sort of safety issues, especially for women. And you may have seen there was a long article in the New York Times 2 Sundays ago called "Miscarrying at Work, the Physical Toll of Pregnancy Discrimination." Part of this story wasn't just sexual harassment, which is bad enough as it is. Women were coming to work and being ogled at as they walked in the door or as they went to the bathroom. They were being told that there was a new standard for workplace attire, and if you had an underwire bra, you would have to disrobe and take it off or go home and lose a day of pay. Women were treated, I'm not going to do this story justice, but women were treated as objects and as less than, not just other, less than, in language and in action. But more than that, this company that had 12 EEOC violations in the last year, this $12 billion public company has had in the last 3 years, 4 women have miscarriages while at work. 4 women who complained of heat, complained of working conditions, asked for light duty assignments and their ability in this factory to do more work. Just imagine when they were told no, and months later had a miscarriage. One woman who was sort of in her years approaching retirement complained of the heat exhaustion and the working conditions to no avail, and died on the shop floor about a year ago. The response from management at the time was to let the body sit there for 2 hours until they could figure out what to do with it, while folks wanted to try to resuscitate this person. They were told no, that's against the union work rules, against management policy, and they didn't want to be subject to a lawsuit. 4 courageous women about a month ago came forward, and they said enough's enough. We've gone through the process of management, we've gone through the process of EEOC. We want to go public, and we want to do it in the broadest, brightest way and shine a light on this. This company, I'm not afraid to tell you, is XPO Logistics. And in the last month since they came forward, the Dow's been down about a little under 5%. XPO Logistics has been down close to 25%. You can't tell me that the S in the ESG here didn't have an impact on the share price of this company. You can't tell me it didn't represent a risk in any portfolio that was holding XPO Logistics, and that's not something that has to be incorporated in your evaluation of companies on behalf of whomever your stakeholders and shareholders are, but certainly mine, who represent taxpayers. If nothing else, if what you care about is that you are delivering the best risk-adjusted return, these are risks that you cannot deny. Now, folks in this room know that largely, and folks in this room are doing the great work, and what I would argue is that it has to be done with 100% of our portfolios, and we need advocacy for more of you back where you're from when you go home, talking to more folks like me and really demanding it and explaining the impact of this on portfolios. And I can only tell you that when this woman, Tasha, came up to me at the end of the panel with tears in her eyes, thankful that someone actually thinks about issues like this, that she felt not alone and that she felt supported, and she believed that bad behavior and bad action would no longer get good rewards. That's what we're here to prevent. We all have a purpose greater than our risk-adjusted return, but in this case, it impacts substantially both. And that's, just as we conclude, where you come in. The situation that we have in this country is that municipal treasurers, city, county, state, have the power to take responsibility and invest for impact. By default, many of them have absolved themselves of that responsibility, either by outsourcing or not making it a priority. That doesn't mean you can't get professionals in to manage it for you, but have a set of principles that you want to manage by. What we need is to push for those folks in cities, towns, counties, states around this country with your help, the people in this room who are sophisticated investors who know better and can help teach, advocate, agitate, and keep accountable our elected and appointed representatives who are managing $3.1 trillion of capital. And it's often overlooked by everyone. It was overlooked by me before I became a city treasurer. I was at Grosvenor talking to folks about their retirement plans and pension plans, right? This is an opportunity for everyone in this room to have an impact by using your expertise and having advocacy with a set of assets that are being completely unutilized in the effort that we're all a part of. Beyond that, I've made this point already. My sort of call to action to everyone in this room with respect to your own organizations is to think about this holistically, think about this across the entire portfolio and your ability to have an impact and also to mitigate risks and send the right message with your capital with the entire portfolio, and transform this outdated notion of our fiduciary responsibility not being representative of situations like XPO Logistics and stories like Tasha's. We need to push our own organizations to be holistic and thoughtful about this across our entire portfolio. And if we can all collectively do that, I believe that we have the power to supercharge the impact that we are already having as a community, and the advocacy that we have, and the power of your expertise if you're willing to step out and help me and so many others push forward. Thank you very much for your time.